Hi, we come to the topic of accounting scope, financial performance. Accounting is also the language of financial decisions. The management of the company would always like to know the financial performance of the company, and this is only possible when reports are interpreted, analyzed, and evaluated. Diagnose weakness. By revealing the level of performance, it throws light on the causes of weakness and deviation from plans of the company. The management then diagnose and try to solve it to get better results next year. The weakness and deviation areas could be several, such as low sales, as anticipated earlier, or high cost of sales, heavy remuneration of employees, which cannot be absorbed easily, or high selling and administrative expenses, etc. Plan to grow. Even if the company is doing well and the reports are favorable, the management finds the ways to grow further by applying more resources and various alternates. The last one could be decision making. Evaluating the reports help a lot to management in future decision making, to improve the business and to try to resolve the weaker areas, whether it relates to sales, purchase, manpower, or expenses. Let's have a look at who are the users of financial reports. There are two kinds of users who are interested to know the company's financial reports, and those are internal users who are in the company and the external users, they are outsiders. An internal user, owner. Now, owner is always dependent on accounts department to review the summarized reports of his business. The one who has invested capital and hired management to run the business is more keen to see the outcome of business, though he is not involved in day-to-day business activities. Then comes the management. Secondly, the management who acquires reports from the accounts department to see the performance and try to put their efforts for better achievements. The reports can help them to as a guideline. Then one of the internal users are employees. The company employees are also one of the users of financial reports. With the help of reports, they could assess the company's position and decide to continue or leave. Now we come to the external user, creditors or suppliers or accounts payables. They are one of the main external users are creditors who supply their goods on credit to the company. They also review the reports to decide up to what extent a credit facility to be given to that company. After that comes the banks. When the company takes loans or facilities from banks, the banks always demand to submit financials for their review and they decide to continue or discontinue. It depends upon the company's position as per their financials. Then comes the investors. Investors are one of the external users of the company's financials to decide to invest if potential found. Then the government for the tax purpose. The government requires companies' financials for tax purpose. That's why the financials are submitted to the tax department every year after audit. Public is also an external user to know companies' strengths and involve buying their shares, etc. Finally, the consumers. These are also users of the company's financials and buy their product if the company is well established and has good reputation. Thank you.